What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor with Jerry Riley Real Estate. I hope you're doing well. Today, we're going to be talking about the Airbnb bust. Now, what some people are saying is that there's been way too many Airbnbs that have been bought over the past few years. People are making less money on Airbnb because there's an oversupply of inventory. People paid too much for their homes, and now there's going to be a rush of supply coming to the market because of these Airbnbs that aren't making any money. People can't service their debt. It doesn't make sense to hold on to the properties, and that oversupply of inventory is going to cause home prices to come down on a national basis. We're going to be looking into the numbers behind that. We're also going to be talking about which markets are most at risk if this were to happen. So let's get right into the data here. We're going to start off by taking a look at an article by Insider here. Switch over to the browser, where basically this outlines the story. It outlines the situation. So they started off the article talking about this person who owns a short-term rental in Charlotte, North Carolina. They were making as much as $7,000 a month. Now they're only making $3,000 a month. So they're making less money than they were in the past. Over half, um, over 50% less money than what they were making. Now, if we read a little bit more into this article, and I'll leave this in the description for you folks, but not every Airbnb owner is seeing this. They point out that some people are busting, like this other person who lost, went from $7,000 in revenue down to $3,000 in revenue, but others are benefiting or able to keep their revenue high. And I think what that has to do with is people who operate their Airbnbs, people operate their Airbnbs in different ways. And it used to be you could just put your listing on the market, um, put some furniture in there, and somebody would rent your house. But now, with more competition and more people bringing Airbnbs to the market, you really have to do something to make your Airbnb stand out. So, from what I've seen, the people who can make their Airbnb stand out, the people who are in a beautiful location, uh, they've been able to do okay with their Airbnb listings, keep their revenue high. Whereas people who have more standard properties or don't really put in that extra effort to attract potential guests, those people are struggling on Airbnb. So if we take a look at what is going on with Airbnb as a whole, Airbnb is setting records right now, at least for as a company. They saw an 18% increase in revenue year over year. They saw a 72% increase in profit year over year in quarter two. So people are booking Airbnbs. Airbnb as a company is a very profitable business model, and people are staying in Airbnbs, at least right now. Now, of course, if we see a major recession and people stop taking as many vacations, then I expect we're going to see Airbnb revenue come down as a company, right? This is not the individual guests. And so the company is important to focus on because it lets us know what's going on with the overall Airbnb and short-term rental market. But really where it matters is the guests, right? Because there could be a ton of guests that are only bringing in a little bit of money, and all of that results in profits for Airbnbs. But as I mentioned before, I think what we're seeing is some people are booming, some people are busting. So if we take a look at what is happening as far as who's booming, who's busting, are renting these Airbnbs in the first place, um, I'm going to use Vermont as an example because obviously that's where I'm at. That's what I'm most familiar with, and it could potentially have implications for the overall U.S. Airbnb market. But here in Vermont, 93% of the people who list Airbnbs on or short-term rentals on these short-term rental sites only own one or two short-term rentals. Okay, so most people only own one or two rentals who operate in this business. Now there's 7% of people who own more than two rentals, at least here in Vermont. But if we look at all the listings on the market, 46% of the listings on the market are owned by the 7% that own more than two short-term rentals, compared to 54% of the listings are owned by the people who own one to two rentals. So basically, this 7% has a 50% share of the market here in Vermont. And I wonder if that's similar to the rest of the overall short-term rental market, to the Airbnb market. And I have a feeling that it is, where there's some people who have Airbnbs who rent their property out where they're renting out like an accessory dwelling or something like that, or maybe they have a vacation home somewhere, or I know here in Vermont, snowbirding is really popular. So you live up in Burlington for a little while, and then during the winter you move down to Florida and Airbnb your property down there, or your property in Burlington while you're away. So it's not necessarily something that you're relying on as a business or as a, so because you have debt that you need to service and you're relying on this Airbnb to service that debt, you're using it as a way to help offset the cost of owning these two properties. Now, if we already see a downturn and you are not able to make as much money in Airbnb, will these people be forced to sell their property? I'm not sure if the snowbirds will. I have a feeling that the people who are uh, renting it as an accessory dwelling or something like that, they can always pivot and put a long-term tenant in there. Same thing with people who have Airbnbs in towns that aren't necessarily vacation towns, like Burlington. I think if we continue to use Vermont as an example, I think Burlington is going to be a little bit more insulated from a downturn in Airbnb revenue, resulting in more listings coming to the single family home sale market and affecting the median sale price than a town like Stowe in Vermont, which is about an hour away from Burlington, much smaller population, not as many, not as much industry there in Stowe. So that really the economic driver of Stowe is the overall vacation market. The people that own homes there, a lot of them are vacation homes. And so there's a lot more Airbnbs around that area. If we see a downturn in Airbnb revenue, if people can't make as much for their off of their Stowe Airbnb, I think there's less options for them. They can't really pivot into a long-term rental as easily as somebody who lives in Burlington. And I think that's the case throughout the economy, where the overall U.S. market, I think places in like Phoenix, which that Insider article mentions, had I think a 60% year-over-year increase, maybe even more in short-term rental listings. If those people can't get the revenue that they're looking for, how many of them can pivot into a long-term rental, put a tenant in there, and still be able to keep the property, and how many of them are going to sell? Right? These are really the questions that you have to ask yourself when you take a look at the Airbnb data and say, okay, if we see a downturn in Airbnb revenue, are the people that are struggling right now, because right, some people are booming, some people are busting. There are some people who are struggling. Is that going to result in a massive increase of inventory that will cause the median sales price to come down, right? Because right now we don't have enough inventory. Supply is lower than demand right now, which is why home prices haven't come down. We need supply to go up higher than demand. We need supply to increase or demand to decrease in order for the U.S. home price to come down, U.S. median sales price. So is Airbnb going to be that driver? Well, let's take a look into the active listings. So we come over, Airbnb right now has this is a chart from AirDNA, right? They track short-term rentals. So this is not just Airbnb, this is all short-term rentals that are tracked by AirDNA. There's about 1.5 million listings that are short-term rentals, according to AirDNA. If we look at the overall active homes for sale, there's about 600,000 listings for sale. So very low supply, right? 1.4 million listings back in 2016, as you can see here in this chart, when it was a much healthier housing market. So we're under half of that right now in the overall U.S. housing market of the active listings for sale. So, if we see these listings double, or if we see all of the Airbnbs, all of the short-term rentals come to the market, we will surpass that 2016 level. And I think, potentially that could be enough inventory to cause home prices to come down, right? It's not going to be where it was back in 2008. If we look at the 2009, 2008 data of inventory for sale. Now this is from December, so it's a little bit different time of year, but still I think it's fairly good data to look at. In 2010, the inventory for sale was right about 3 million homes for sale. So even if we saw all of the short-term rentals disappear from where they are now, if they all had to come to the market and people were forced to sell their homes, we would still be under the number of active listings from 2010. Of course, if that happened, if everybody on Airbnb and VRBO, if they all were forced to sell their properties, we're probably in a much tougher economy, and there's probably other foreclosures, and maybe inventory at that time gets above 3 million homes. But I guess the point that I'm trying to make is it's unlikely that we're going to see all of these Airbnbs, all of the short-term rentals come to the market. So what you need to think about is if revenues go down, if there's an oversupply in listings and people can't make as much as they once were, where are we going to see people being forced to sell, and what markets are going to be most affected by an increase in inventory due to Airbnbs coming to the market? Um, Now, I alluded to it earlier, but I don't think markets like Burlington, markets that you can put a long term tenant in, are going to be as affected as some of these vacation markets that have seen people flood into Airbnb, like Stowe potentially here in Vermont, or in other states, maybe Joshua Tree or Pigeon Forge. These are places where if the numbers don't make sense as an Airbnb, they likely don't make sense as a long term rental either, because there's just not the long-term population that that wants to rent. The long-term rental market isn't nearly as strong in some of these vacation markets. So I think if we do see revenues continue to decline on Airbnb, if there's an oversupply and people with poor short-term rentals are forced to sell, then we could see inventory increase in some of these vacation towns, which could cause prices in those areas to come down, especially if we experience a recession and people are spending less money. If we see that Airbnb revenue come down, if we don't see the spikes like we have been seeing, um, there's a lot of troubling indicators in the economy with debt, with consumer debt. If that starts to affect how much people are spending on their vacations, on their nightly stays, then I think overall these vacation markets are probably the most um, worrisome for me as I look at them, with the biggest risks of a price decline. But I think some of these other markets, like Burlington, if we continue to use Vermont as the example, are more insulated from a downturn in the short-term rental because of the options that they have. So anyway, all my contact information is in the description. If you have any real estate needs, feel free to reach out to me. Let me know what you think about this video. Leave me a comment. Do you think I'm right? Do you think I'm wrong? Do you think the Airbnb bust is going to cause home prices to come down across the country? I would love to know your thoughts. Other than that, I will see you folks in the next video.